we achieve in life. Like Mr. Mark, our relationship should be between close to 2 years now. And one thing common in this relationship, I've met a client introduced to him. The mind of this is my own client. Why did you get it? This other one, this is my own client. In fact, somebody has surprised me recently. Somebody wanted to buy Monument Park. Then I sent Mark details, a simple phone call to her. Then however, saw the Mark didn't tell the lady told me the last airport. It was Mark that did the phone call. So you see now. So when you associate with the good people, I'm telling you something good is also going to happen to you. So this morning I have our own originator. He knows his work. You understand it better. You pieces it. You tell you the rudiment and everything that you need to know. Prepare your question. Yes, the question you prepared, I've sent to him. I'm sure you might have more other questions this morning to ask him. So welcome on stage, Mr. Mark. You have a question.
How many minutes? Yeah, thank you, Michael. Thank you for inviting me today. Guys, I just want to say, the last meeting I had with you guys, with KBB's office as a student, I was quite impressed with your office because I can see that you guys are learning. You guys are ambitious in it, and you guys want to grow it. I could see the type of answers you're giving back, the feedback you're giving back, the type of questions. So I'm very impressed with it. So well done, guys. Okay, guys, so my training, I was training something else on training, but I changed it because my training is based on the questions that you answer, that you ask, right? So, first of all, most importantly, born originator. What is my role as a born originator? I'm saying it right. So I have two roles that I play. Plain and simple. My two roles is firstly is to get your client at born. That's what I'm here for. That is my role, to get your client at born. Second function is, you as an agent, is to keep you in control of the deal. That is very crucial. Because as soon as you lose control of the deal, anything can happen. That's why when a client goes to the bank, you have no control over the deal. So that is my role, to keep you in control. That's it. So I'm going to start with the questions. Now I'll give you the answer on the ready now, and I'll give you the answer. So the very first question was, what is the minimum and maximum loan amount of the purchase, of the offer? Maximum and loan amount of the offer for property to be purchased. Sorry. So the minimum loan amount is 100,000. We cannot apply for a loan amount less than minimum. Banks want to see the whole loan. And remember, the bank is in the game to make money. Right? The less the loan amount, the less interest the bank is, right? The maximum purchase price is up to the affordability of that money. If I'm not mistaken, it was a bachelor flat. Bachelor flat is sold in Cape Town. It was sold for 800 million. It was a bachelor flat.
Bachelor flat sold
in Cape Town, yeah. It was sold for 800 million. Yeah. So, purchase price is the max. It's up to the value of the client coming to purchase. Right? When it comes to those spaces, it's about affordability. I'm going to give you a very easy calculation to remember, guys. I'm not sure if I shared it with you guys. It's a very easy calculation. If you want to know, thank you so much. Always don't do that. Folks. It's not very easy. Okay, so simple calculation to remember, guys. You want to calculate how much yourself you qualify for, how much you plan to qualify. So you take the income. The basic, I'm using an example. Let's say 10,000. Multiply that by 20. 10,000 multiplied by 20. That should give you a purchase or loan amount of 280,000. If you want to do calculation, if you want a client say how much do I qualify? Take the gross income before tax, multiply by 20.
By 28.
Oh, it's a very quick calculation. 20,000 income, multiply by 20. 560,000.
So the income, let's say the income is 8,000
Multiplied by 28.
multiplied by 20.
That is your loan amount. Okay, now the client is now asking how to buy a property for $1 million. How much income is it? Take the purchase price, divide it by 20. You take $1 million income, and you divide it by 20. That should be about 20. When you divide it by 20.
That is 5,700.
35,000. Oh yeah, it is approximate. Yeah. Yeah. So if I come to you and say, guys, here's a $2 million property. Can I buy this property? You say, give me your income, divide it by 28. That will give you a quick calculation to client income. So if a client is getting 10,000 rand, you must buy $2 million property. Okay. And don't take a client to a property that he can't afford. You all understand it, right? You're creating a very
It's multiplied.
yeah. To find the maximum amount, you multiply. And to find the income, you divide. Okay, don't have to go there. Okay. So you understand the minimum loan amount is 100,000, maximum is up to affordability of the client. There is no maximum. Right? Second question was, what types of properties do you finance? For example, residential, commercial. Okay. So home loans, guys, it is residential finance. So the main focus of home loans is to put that client into a property. It's not to make money. Remember, the purpose of buying a property is the person to live. That's home loan finance. Yes, people do buy a residential property to rent it out. Then we do it under the home loan space. But the purpose of that property is for personal use, is to live in. So it's residential. That is what we do residential finance. As soon as a client buys a property for business use, it's called commercial. I'll use an example. Vacant land. You get vacant land for personal use, you get vacant land for commercial. What I mean, I buy a plot, like 1 hectare, like so tomato. My plan is to live in it. It is residential finance. It is home loan finance. I buy a farm of 100 acres. The aim of that farm is business use. So it becomes commercial finance. Okay? When the purpose of that property is to make money. For example, we have a house, a land house, sorry, a yard. It has 5 properties on that house. What is the purpose of the property? It's to make money. It's commercial. So what I'm saying? It's 2 properties. It's the as it's not multiple units in it. It's commercial finance. That's it. So we do residential finance. As soon as it comes to commercial finance, it is a business. You have to go to a business bank. We don't do it because it takes very long. Approval, like we take maybe 5 days for approval. Commercial takes up to 8 months. Okay? And the deposit is quite low. You're not going to get 100% from commercial. At least 30%. That's our commercial. And so if a client says, listen, I want to buy a block of flats, it's commercial finance, you get 30% deposit. Any questions regarding commercial finance? What is a typical processing time for a bond application? So I'm going to start with, let me first start with a pre-approval itself. So pre-approval, when we get a client's documents in, we do a pre-approval, and you feedback normally in the next time, it's like I'll come back to pre-approval. Now let's say I've done a pre-approval, without the pre-approval, and you give it off to purchase. Once the pre-approval is done, and I get off to purchase, it's much quicker, because I got a client's cost, it's already loaded in the system. It's easy to make the process. So you'll get an answer, I think on average, guys, I think about 3 days. If I'm not mistaken, 2 to 3 days, you get an answer. The rest on this will follow approval from my side. Right? If there is no pre-approval done, remember I must do that system first. I must open up the client's file, so look at it and study the client. Because I don't just get a document and something. I study the client and make sure of the structure. So that takes a bit of time long. So on a normal process, you're looking at 3 to 4 working days for a normal client. For a client that was not pre-approved, you're looking at an extra day, 4 to 5 working days. That is the first approval. First approval, so let's say on every 4 days. Valuation, 3 working days. So within 2 weeks, I'm done with it. The deal should not be in my space unless it's a bit of a complicated. Okay? Within 2 weeks, I'm done. Any questions on the process in there? So what I'm saying is, so when I get a deal, first question is, did I do a pre-approval or did I? If I didn't do a pre-approval, it takes me a bit longer because I need to process it quite myself. So if there's a pre-approval done so from getting the documents from you, to getting the first approval from the bank itself, it takes me about 3 weeks. If there is no pre-approval done, it takes me about 4 to 5 months. It's a first approval. There is meaning for the credit rating says yes, I'm. After debt approval, according to valuations, it is not a property itself. Debt takes another 3 to 4 months. It's when a bank goes out to value the property or they pass on their financials and stuff. So there's 2 approvals. So, client and a property. In 2 weeks, I'm done. And it goes further, we'll turn this section.
So for the bank to go live, after you submit the OTP to the bank or...
Okay, I'm going to come back because I think there's one other question, right? So I'll come back to it, right? Okay. Then the next question is, can I provide a breakdown of all the fees associated with the bond? Okay. So the fees involved for the client from our side. So very importantly, very first thing is, there are no fees paid to us as a bond originator is not allowed to charge the client. I do not take a cent from the client. The bank pays it. Bank institution. Sometimes the clients want to both of them to accept that, but we do not accept payment from the client. No bond originator is allowed to charge the client. Whether for a pre-approval, whether for the communication. Right? The bank themselves, there is also no fee except with investing. I'll come back to the supervision. Right? For the client itself, with the banks, normal banks, EPSA, FME, Standard Bank, SL, there are no fees for the client. There is an initiation fee which are included into the bond. The client don't pay for it. Right? No fees to the bank, no fees to us. Like that. Investing, what's it like that? Remember, there's a value. Invested, charge the client for the value. So how it works with invested, once a bond is approved, client is happy, they will ask the client, are you accepting? Know that you will pay our valuation fees. Right? Valuation fees can be anything from 6,000 to 30,000. Yes.
For evaluation.
Yes.
Is it on commercial?
Residential.
Residential?
Yeah. The reason they charge fees is, depends if it's a normal loan or it's a building loan. We have to go once to the property or we go several times. Remember when a client does a building loan, right? Remember there's progress pay, meaning step by step. So when you bank director will go on every time, maybe 6 times. Invested charge it. If there's an amendment done to the property, invested charge it. Invested is not cheaper than normal. Private banks are very expensive. It is just a status. That's it. You pay your status. And you pay. Get your 20s. Next question, number 5. How do you determine interest rates? Are there any promotional rates? Interest rates, okay. It's all about risk to the bank. It's not just one thing, it's a whole lot of factors that combine. Client's credit bureau, client's income, is the client saving money, is the client taking personal loans. Remember, it's a complete overall risk of the bank. For example, if you have someone who takes a lot of personal loans, every month taking short-term loans, you're having a client saving money. Who will you think is a better client? Who will you want to invest in? Personal loans or saving money?
Savings.
Savings money. You understand? The person that fell in the arrears, credit bureau is clean. In credit bureau. A client that does not have any credit bureau, meaning he doesn't have any accounts. So the bank can't determine if it's a good or bad credit. It's a risk. Because we can't determine if it's good or bad. Remember, that's what I said, to make debts, you must have debts. Take a home loan, you must have debts. So for interest rate, it's a whole lot of things. The area of the property, the type of qualifications a client gets, the type of client he is, how he handles his account, and also the loan amount to the client's income. For example, I have an income of 50,000, right? I can qualify for 1.5 million, 50,000. But I'm only taking a loan of 1 million. So I can qualify for 1.5, but I'm only taking a million. So to the bank, I'm a less of a risk. Because I'll easily afford the million instead of the 1.5. So it's less of a risk. So the higher to your maximum, the higher your risk becomes. And also how many properties do you own? Having one property versus person in 5 properties. And we can take this one. How are you going to afford if your tenants don't pay the rent? It's a risk. That's why if you earn multiple properties, the bank starts asking for deposit because it's all about the risk. So remember, interest rate is about the risk of the client. And many times I heard, and especially in the white community interest rate, they work together. The one will get a good rate, the other one expect the other one also to get a good rate. You can't do it because you're two different rates. That was so different. You can't say because I'm working for PNG and you are working for PNG as supposed to get the same rate because you get the same income. It doesn't work like that. This person is taking a whole lot of loans, but this person is saving money. It's about that risk.
So the client doesn't have any debts.
Any?
Credits.
The problem is the bank can't determine if you are good or bad person. It's like I'm coming to you. You don't know me from a past. Ask you for I don't give you. Same principle. They don't know you. So you never taken, imagine this, you maybe at the age of 55 or 60. You've never taken account, nothing. Now you want to buy a 3 million.
You don't have a good salary.
So, yes, you have a good salary, but you don't have a track record if you can pay tax. You must have a track record. Because remember, they need to know how you grow their okay. Number 6. What is the repayment term options? Example, monthly or quarterly. Okay, so the normal repayment terms is normally on 20 years. That's your term normally, and pay it monthly. Right? You can shorten the loan term, yes, but remember, shorter loan term means your installment is increasing, which means your affordability has to be higher. You understand what I'm saying? For example, if you're earning an income of 30,000, over 20 years you will qualify for 900,000. Over 10 years you will qualify for 700,000. Over 30 years it will be in $1 million because of your loan term. So the shorter the loan term, the less of affordability you qualify. Because remember, your installment. Okay? The different type of monthly payments can be changed, but it's normally for farmers. Remember we said farmers, yes, farmers, it's commercial. Remember how it works with farmers, Michael? They have time of harvesting. Remember there's a time for a farmer, you go to the time of only expenses. There's no income. You plant, you remember? So there's no income coming. Then after that 6 months, then you go to a place where you sell it, it gets in the money. Say, then you pay. For farmers. Oh, that's where you get paid. You can also yes. But it's commercial. So you can get you get what you get. If you have a client is a farmer, you get that. Is there penalties for early settlement on a home loan? So the question is, are there any penalties for settling a home loan early and how it is calculated? Guys, when we have a board, right, it is no penalties unless you ask the bank for the penalty, right? What I'm saying is, I buy a property from my job for 2 million rand. I buy it today. Tomorrow I'll win the lotto. Take the 2 million from the lotto, I pay it into my account. I owe the bank. Yeah? Because I paid it into the lotto. I didn't inform them. I just put money. Automatically I owe the bank. Now, because I owe the bank nothing. And I said, Mr. Bank, I want to cancel my loan. They can't work out interest. Because I owe the bank nothing.
Okay, well, go ahead.
The only penalty you pay is called cancellation fees. Attorneys, a cancellation attorney, because you want your time to pay. Remember, I settled my bond. Remember, my bond papers is by the deeds office. So So I want my papers. Because I want my papers back from the deeds office, I have to pay a cancellation attorney for those papers. Not the bank, because they got nothing to do with the bank. Remember? Deeds office, I need an attorney. I can't go to the deeds office. I need an attorney to get it from. If you owe $1 million on a property, and I say, Mr. Bank, I want to cancel the property. I have the $1 million, but I want to cancel. The bank will say, okay, client, you either have to wait 3 months, or we're going to charge you 90 days notice. But if I have to pay the money, I don't owe the bank. You understand the difference? I owe the bank $1 million, I have the money. I'm telling the bank I want to cancel. The bank says, okay, client, you cancel. You informed us either 3 months installment or 90 days notice. Right? So my installment will be on $1 million is 10,000. So 3 months installment is 30 grand. I will pay the bank 30 grand if I owe them and I give them notice. If I pay them without giving them notice, they're going to charge me on 0 cancellation. Which means it's no money. You understand? If I go to the bank, I pay them. I don't inform them, I just pay. And then I get to them. I have to pay them. Because I gave them, they can't charge me on 0. You understand?
I understand. You see, so that's the question I wanted to say. I want everybody to understand.
Yeah.
Because that's exactly the question I want. I didn't want to go through that question. Okay. I bought property. If I have 1 million, I bought 1 million, I have 1 million tomorrow, I have 1 million. Then I pay it as explained.
Yes.
Now, without informing them.
Yes.
Because I know that in this period of 3 months to notify bank, I'm canceling my portfolio, I'm selling all those things that come with the cost.
Correct, yes.
Yes, sometimes 6,000 I go.
Yes,
Yes,
yes, yes.
bank does their yes, for cancellation. Now, I put the money back, exact money that I'm going back, I put the money back. Remember there's an interest calculated
Of course.
across 20 years that I'm supposed to pay them.
No.
Before.
Okay.
Yeah, but now I paid up, without even notify them. You mentioned that then I'm not owing them anything.
Yeah. Remember, with a home looks different from a vehicle person.
That's what I'm talking about.
Vehicle personal, not interest, if cancellation interest. When you sign a contract, they say, my God, this is your interest, you'll be paying. You have to inform them to get interest rates. Home loan works different. What works in every single day, they calculate your interest. And in everything. The bond is today, right? Day 1, registers, day 1, registers. Day 2, I pay off. I will only pay 2 days. You understand? Home loan with interest is charged, we're calculated daily. You only pay for it for the time frame we have. So if we have it for 5 days, you will pay 5 days interest.
Everything comes with that.
Then you only pay the cancellation again.
In a case whereby I took a loan of 1 million, I put in 500,000,
Yeah.
they remain 500,000.
Yes.
What do you mean? What is the explanation?
Okay, so let's say again, 500,000 is it, so now only for the bank 500,000.
Yes.
So interest from that point on is only on 500,000 because I owe the bank 500,000. But the bank don't automatically adjust it. Remember initially I was paying a fund of 10 from the bank.
Yes.
So now you're going a fund of 500,000. Interest on 500,000, but your installment is on the bank. So let's say you say, no, I want to pay off my fund. I want to change my score. I need to go up to that payment. So which means that $1 million payment, the 10,000 payment, you are paying actually double. So you are eating into your interest because you are paying more. But you can adjust your installment. You can't say, Mr. Bank, I paid you 500,000. I want to adjust my installment to the new normal. You can't do that. Not a problem. But preferably, if you can afford it, you keep it at that level because you're used to it and you're just eating your interest. Meaning you pay off the bottom first.
Another question. Remember, when you're buying bonds, when you take a bond of 1 million, you pay 2 million, isn't it?
On the interest of the 20 years, there is plus. Yeah, yes, it's true. Yeah, no, there was no come there.
When you take 1 million bond, you pay what? Pay 2 million.
Yes.
That is interesting.
Okay.
Now, I put now 1 million back.
Yeah.
So, which means
There's no difference.
that's very interesting. You get, because
You know what I'm saying?
you get everything now. Because it's different from when it's double, bank double.
Yes.
You will take 200 for the home loan, you pay 200.
Extra, yeah. So you take a loan of 200, end of the day you're gonna pay 400.
400. Yes. So, but when you put in half, you're still going to continue to pay the double of that half.
Yeah.
Like that one.
Exactly. So the quicker you pay, the more you can use it.
So let's say, for example, your payment is 5,000. If you feel like you have 6,000,
Yeah.
you pay 800.
Okay, you can, what I'm mentioning about home loan is, it's not like a paper person. You look at a person, once you pay the money in there, you have to give them notice, right? Because as it is, we have to inform them, listen, I paid the extra account. We have to inform the person. It's a must, you guys know it, right? You call it capitalizing. But the home loan, you don't have to, you can just put your money. So that if you are a single person, you can link it to your banking app, and you can just transfer. That's what I do. Sometimes even an extra 50, it makes a difference. Don't believe a 50 that makes a difference in the book. When I have extra, you just do it. You can now join the part that you give a consent to everything. Because if it's a joint, you share it. You can't get it the company. You need to have power with it, then you can get it. But once you have it, you can just transfer money. It's not a problem at all. And the other is the person has to give you consent because you can take money out again. And there's what a problem is. Taking money. Aim is to put in, not to take out. Put in whatever you can, you are saving interest. It makes a difference. Believe me. 500 rand can save you 5 years ago. So we touched on penalties, touched on there. Okay, what is the requirement for self-employed individuals for those non-traditional? Okay, I don't want to go too deep into self-employed because I'm going to confuse you guys because I think it's a topic on its own. But I'm just going to say the minimum requirement for self-employed is 3 years financial start. A self-employed person comes to you and says, for example, a taxi driver, I don't have financial statements. I'm self-employed for 6 months. Is that what I'm saying? 3 years financial statements from an account. Why 3 years? Because it's the bank determined as normal new companies falls within the first 3 years. If you can prove that you're existing for 3 years, then you are sustainable. 3 years financial, it's a minimum. Non-traditional income, between other incomes, besides our salaries, right? Remember, income is always confirmed in 2 places. Bank statements is not it. For example, I mean pension income, I will have a pension letter. Pension income, you will have a pension letter, you will have bank statements. 2 places. I'm a Uber driver, get your pay slips or invoices come to Uber, to bank statements. That's what I'm saying. Income is always confirmed in 2 places. Rental income, rental contract, bank statements. You can't just say, here's my bank statements, I'm self-employed. I'm a hairdresser, clients are putting my money into my account, I pay sometimes myself. That's it. Income is always confirmed. Okay? Self-employed, minimum 3 years financial from an account. Right? Minimum. What is a minimum? Do you require a minimum credit score? How do you assess the credit worthiness? This is when it comes to pre-approval. So it's difficult to tell you this is the credit score because different platforms have different points. So we use, for example, Lucid. Lucid points is minimum 750. The client goes directly to TransUnion, their minimum score is 650. Experian is 600. Clear score is 500. You understand what I'm saying? So for the person just to say 500 points or qualify, so that's why if a client has done the credit bureau himself, I will request the credit report to see what it is and it will tell me what the score is. So it's difficult just to tell me this is the course. How we do we determine it? Of course, running an IPC report, that's how we determine it. The banks themselves, this is how you quick work with the system and see where the guys can come from. For example, EPSA Bank uses TransUnion Experian. It's EPSA. They use those. FNB only use TransUnion. Only. Standard Bank only use Experian. Their bank is good. What's the importance of this? Because a client can be listed on TransUnion, but it might be free and credit. So it's again about tweaking the system. So if you know debt, and we know a client is complete on something else, we can definitely do it. In Japan, I recently done a deal for 1.7 million. The client didn't come right, said someone in his own bank. So I asked him to give me his credit reports. He gave me both credit TransUnion and Experian, and I could say, okay, I can take this deal to Standard, and I got it. So if you're looking at those like, okay? Loan to values. So here is what is the loan to value ratio? Are there any specific requirements of different types of properties? So loan to value, of course, the loan amount to the purchase price. So of course, normally you apply for 100% loan amount for a client. Vacant land, 60%. Client is buying a vacant land, 60% loan, which means 40%. That is crucial. You come to your foreigners as well. Normally the banks want 50%. EPSA is the most lenient when it comes to foreigners, meaning you have a passport. Michael, I don't understand. We pick up a lot of foreigners or temporary residents in South Africa. They normally have an FNB. Is there a particular reason for it?
No.
Foreigners like taking, and you guys know, why do they like taking FNB accounts?
But FNB is easy than ABSA.
But they are worse when it comes to open finance. It's for foreigners. So if you
What do you know? They don't know.
yeah, I don't know, but most of them, most, it's FNB. So if you have a client, temporary resident, it's an investor looking to buy, it's coming to South Africa, it's looking for accounts, if you speak to them, please get some banks.
Oh, okay.
It's most important because for a temporary resident, if he has a problem with it, you can get up to 100%. So please, if you can, invite them to take EPSA. I've even told clients, you go to FNB, you're not going to come right, move your stuff to EPSA for 3 months, and then we try. And it worked.
Wow. Oh, thank you.
They are the most lenient when it comes to temporary residents.
They frustrated me, that's why I had to go.
Exactly.
I'm not talking about.
So, EPSA, yeah.
They frustrated.
But when it comes to the home finance, they're the easiest.
So, that's the question.
Yeah.
That just, sort of point of
Yeah.
what's the main responsibility? Why doesn't the bank have
Look, they do have, see the bank consultants do have home consultants in the banks. The problem is you're going to go to a bank person, right? And it's normally you go to a branch. So you have a branch person that does home loans, check account, credit cards, all of those accounts. Those people are not specialists in their fields, right? Now, the problem for you is you can't follow up their deal.
you can't?
How are you going to follow up their deal? You can't follow up their deal. Because remember, the homeless guy in the bank, he's not going to give you shelter. You don't think you're going to have similar things. You know what you're going to have? The landline number. Think about you phoning FNB home loans or FNB branch or anything. That is your problem. So they don't have specialists in the field, firstly, and to get for you to get feedback. So there's no control. Like for example, if I do a deal, for example, let's say instead of getting a client, let's say for the property itself. Oh my God. Because I want to make a deal. The bank guys or the client understand the difference. So the bank will look up the interest, they look up the client interest, I look up the agent.
So in a way, you will have authority to say to the bank to negotiate that amount.
And I can negotiate the rates and things like that. I can make
That's interesting.
yes. But the bank guy will tell you you can't. I won't tell you. Yes. Okay, pre-approval process. I need to explain it now. I'm going to go quickly through it. As you know, pre-approval, the client must sign an APC form or complete a form. The reason for it is the client gives us consent to this valuation. It is crucial. The process itself, normally guys, within a day or if it's a bit more complicated, it takes a bit longer. But I want to ask you guys, especially for your guys' office, Something you guys need to look at is asking the client about rental contract and rental income. Because a lot of times your clients are investors. So the type of buyers are investor clients. So always like to ask the client, does he already have properties? Is he getting rental income from this place? So we can use it. Because you see sometimes affordability is a concern. And then we can use it rental income. Michael, you guys do rental as well in some ways. You guys help your clients buy from you guys?
The investor and the tenants.
Yeah, the owners. Your rental and properties for them. Do you guys guide the client not to take room rentals? How do you work around the room rentals?
Okay, based on your experience and others that I've done,
Yeah.
I ask them to also structure their buildings. Maybe they can have a personal account where they push everything into their main salary account to reflecting as instead of paying bit by bit.
Yes, 1%.
Okay, like our own now.
Yeah.
We don't pay room by room to them. But
Yes.
we do a lot of cosmetic.
Yes.
We pay bulk
Yeah.
to them
Yes.
as a whole flat. Let's say we multiletting here, the whole income is what we pay at once to them. That reflects us.
That's 1%. And it is crucial because, again, in the investment space, especially in the Sunnyside area, we find that clients do a lot of room rental income. And unfortunately, we can't use room rental. It's so important when you help those clients, coach them, and sign them up to tell them, listen, this is how we do it, so we can buy more and more properties from us. That's help and
advise
coach.
them a lot.
Yeah,
Generally,
yes,
it's come to us.
because remember, room rentals, the banks don't consider it as income. That's crucial. Okay.
Thanks for confirming this.
Is an income, room rentals, it's squatting, it's illegal. So what's happening in, what's this one?
You call it illegal. You call it illegal.
Illegal, it's squatting, it's illegal. It's illegal, that's what I'm saying, you call it squatting.
You call where they are making 40,000.
You see the problem is like, okay, so the problem is, for example, eventually there's no control. There's
Victoria is still manageable. Victoria is still manageable.
Pretoria is not manageable. Joburg areas are not in control. Literally, even the owners can't go into the complex. There's no control. Did you watch Jerusalem?
Yes.
That is definitely a joke. Literally, yes.
That's okay. I'm wondering
Yeah.
since I see this groups, so this guy, the rooms belong to his man. So in 10 rooms, and this one is the one running them now.
Yeah.
He wants to apply for.
No, it's not his house.
So this house, so this house, even if money comes to them.
So what happens is usually only the rental income. The banks has two systems. We also have one. So credit rates. We can then pick up if you own properties. If you're not owning properties, how can you get rental?
Even with taxes, when you spoke about the tax, he has to own the tax.
No, it's like a tax is something else because remember it's a business. So that's where financial statements come. So you have a tax invoice, I got 10 taxes. Remember they keep cash and stuff like that. So I need financials for it. But let's say the rentals, for example. I can't get financials for rentals for properties that I look at agencies different. You can't be renting on other people's properties. If I, let's say for my example, my mother's property. My mother said, okay, this is your property, but it's not on your name. You can't use it because you need property needs to be on your name. Must be rented. Get rented.
But with taxes is different.
Yeah, it's a business. Remember, it's a normal business. Yeah.
Okay. I want to go back to the question. Now, you said, family member, as you said, has email to manage certain rooms and generate income. The whole bulk of that income coming to his account as kind of maybe income as a salary or they pay as a salary whatsoever. Then it now comes to you, he said, they wanted to buy, and this thing has been running consistently for 6 months or 1 year. Now you have to go through your buy property, then
Okay, so how are we going to prove what income is? I'm going to say it's a salary. Because remember, rental income, must have properties. So if you say salary, okay, you can try salary, banks can do credit checks and they can pick up. So the banks do checks. You can try it as a salary, it's a fixed amount with a place and stuff, but a bank do some confirmation against salary. Yeah. So you can't just take money in your account and say it's mine. You know what I'm saying? For example, I pay you up to 10,000 per month. Right? You sell this, I sell that. Go to the banks. Payslips are not enough. The banks do a lot of checks. They do a lot of big checks. They go to company loans and stuff like that. So they pick it up. Sometimes they get away with it. Most of the times they get those checks. They report to the fraud prevention services.
Like what happened to the guy in Nigeria?
Yes. They report you. When they report you, you can't take them. Okay, difference between fixed rate and variable rate. So firstly, variable rate is linked to prime. Goes up and down. Every time the Minister of Finance is saying the rate has changed, it will come down a bit, your rate will come down. So remember, variable rate goes up and down. Fixed rate is fixed for a certain time. Whether 2 years, whether 3 years, whether 5 years. It's never for 20 years. It's normally 2, 3 and 5 years. Fixed rate gets offered after the bond is released. Not immediately, once the bond is released. Why? Because the banks can't determine at that point of time when doing the deal what the market will look like in 6 months' time. In 6 months' time or 3 months' time, when the bond registers, the market will have changed. For example, you buy a house today, 3 months' time you find Donald Trump is going bonds in South Africa. For example, that will affect the market. That's how it really is today. Anything can happen. So that's why they can't tell you now what the fixed rate will give you in 3 months' time. Right? But remember, this fixed rate is always higher than the variable rate. Can be 1% more, can be 2%. It's determined by the market. Meaning, if the market at that point of time look like the rates are going to drop, it gets better, they will offer you a better fixed rate. If it looks like the rates are going to go up, it will give you a worse fixed rate. Banks are in the market to make money. Always remember that, right? Fixed rate is always higher than the variable rate. The question here is asked, which one do I recommend? My personal opinion, I will never take a fixed rate. What I will do though, this is what I do. I will calculate my installment on a higher interest rate. So for example, a bank gives me now an interest rate of 10%. Right? This is what I do. I will pay my installment on an interest rate of 15%. The reason I do this is I'm putting extra money into my money. So I'm eating the interest. Now, whether the interest rate goes up or down, it doesn't affect me. Once you get used to something, you're used to it. That's what I'm saying. Like the person who buys a house for the first time. You're going to carry for the first 3 months. You're not going to have a bride, you're not going to have a mosquito, you're not going to have wine. You're going to choke it. You're not going to have a nice meal, you're going to have most of the time chicken. Because you're going to have to get used to the installment. But once you're used to it, you're used to it. You see what I'm saying? Now, if it goes up and down, human nature goes up and down with it. If the stock market goes up, you go find something else to do with it. If it goes down, up again, then you pinch again. And you start having negative. So I will fix it at a higher amount. 15% is long where I can afford it, and you know you're putting extra into your bond. So as the rate comes down, and the more you put into your bond. If it goes up again, the used to it.
So variable is much better.
My personal opinion is variable. It is my personal opinion. Rather variable, but put in the highest fixed installment. Any questions regarding fixed rate? Guys, happy that so far? Next question is, are there any additional insurance products or services that we offer? Okay guys, so the banks do offer insurances, life covers, credit life, property insurance. So the property insurance in your space, you guys don't normally have it because you're selling also like flats, complexes. So flats, there's normally no insurance, property insurance. With a house like this, you have to. Other products, the client is not compulsory, it's called life insurance. Credit life. Yes, we do have guys that also call their clients without the clients. So remember I said it's credit life insurance. I do not like credit life. The reason I don't like it, it runs for the term of the law. It's like life insurance, but it expires. So meaning, you take credit life for 20-year term. When your bond is paid off, credit life falls away. So let's say you paid it for 20 years, right? 821 years, so the bond is not paid off. 821 years, you either get ill or you die. You get nothing. Because it's credit life. It's for a credit life. After 21 years, there's no life cover because your bond is paid off. Life insurance will run until something happens to you will pay. Age of death. Credit life expires with your bond. Life insurance is with you.
It's your choice.
I prefer life insurance because it's Murphy's law of center. Boom, you get sick. Now you can get life insurance, but it was credit life. Sorry, said cancel.
Question about this. I want to buy property. I have insurance. Most of the time, some of these banks, I don't know what they want to like. They don't want to work with the client insurance. They said, I prefer this one. What are you going to say as well?
Look, so it's not like life insurance, right? It's not podcast. But remember the banks, again, they're in a space to make money. So once a bond is approved, even though they don't get it done, the broker will decline and he will try to sell policies to them. Unfortunately, we don't. It's a client's choice. If a client doesn't want the bank's policy, wants some policy, it's fine. But the bank will try to sell themselves. Unfortunately, it's not. So remember, we submitted to the banks, all 4 banks approved, FNB, client accepted. The other 3 banks, they know it's a good client, but we want this client. They will phone the client trying to sell a policy to them. It's not forced upon them, it's not compulsory. It's a good thing to have, but unfortunately, like now, there's nothing we can do. Even Canada will phone you for stuff. Because I don't know how they find you. They'll just start phoning you. You can just tell the client to cut the calls.
Okay. My next question is this. So many, just for everybody to know, especially in the that when you are buying property, especially you are buying through bond, you must have insurance before the bond can be registered. You must have an insurance where you put up the bond.
Not always, depending what insurance and what type of property. If it's a house, then you must have property insurance. Right?
It's an apartment.
If it's an apartment, the insurance is part of your lease. Remember, it's not part of the bank. Remember, if you buy an apartment, buy a flat, that's why they'll ask the body property. They'll ask for that certificate on the lease. Remember, when you're buying an apartment, your lease, your insurance is included in there. It's not separate. So the insurance certificate is not from the client. It's from the body property.
Oh, really?
Yeah.
Because there was a time we discovered one of our clients in Wonder Park Estate that she must take up an insurance before they are approved. But I don't know what is
The body corporate, are they not paying insurance there? Because normally you pay part of the lease.
Yes, I know, but I think it was better resolved.
Okay.
But I would just need the clarity from you to know that. Does it mean that when you are buying property through the bond, also the client must also, especially an apartment, must also take up insurance?
Yeah, so normally in the apartments, the insurance is part of your lease. It's normal. It's normal.
That's what
It's normal for a place in your area. For the house, you must have a property insurance.
because I'm like, when you are buying
For
a
the
house,
house, you must have a property insurance. That you can have for the bank. For flats, must be in your lease. Again, during the job, some of those blocks don't have insurances. They don't.
even the transport here,
They don't have insurance. Do you understand what that means?
you need people that they rejected the current insurance company and they are not, but we can't register them.
It doesn't make sense. You understand what it is? If your flat is in the corner, right on top, you can't insure it anymore. No one is insured. The block burns down, it blocks burns down. You understand? Yeah. That's why you pay to the public. Because it's one insurance running the whole block.
But the life insurance is also assisted with buying a house.
No, not really. Remember, life insurance nowadays is not as compulsory. Yes, it's compulsory with personal home buyers, but it's not a deal breaker. It doesn't promote it to remember because in most clients it's not compulsory anymore. Back in the day, clientele that you said about HIV. Remember the one person said HIV, they can insure us for your home. It's nonsense. You don't need. You have HIV, you don't need lifeguards. How many banks in the way to HIV positive? You don't need lifeguards. It's not compulsory. They'll say it's a good thing to have. You always tell them like it's not compulsory. It's something to have, especially if you have a family. If you have kids, and something happens to them tomorrow, you don't have a life cover, the bank can take away the property. If you are single, I mean, I just dispute with some of my clients. If you are single and they have no kids, nothing, they said nothing about that. It's understandable because they don't care. They have nothing. They die, they die. They don't even have dogs. So, it makes sense. But when you have a family, it's not compulsory, it's not forced upon you. It's a good thing to have. No, the bank will call the client, unfortunately, they have no control. But he can use his own policies. This is a question I don't understand. It says here, how do you handle changes in an applicant's financial situation during the application process?
So I want to know, in a case where someone is trying to buy a house and everything is going well, and suddenly maybe as a couple, then the husband maybe falls ill or falls sick, and then that actually puts their work in jeopardy, or they're getting that amount. So what happens in that space in time? We actually decided to buy the house, we're in the process of buying it, he falls ill or an accident happens, he cannot work anymore. So does that now hinder anything? Does that hurt anything?
Yeah, remember, so for example, let's say two of you guys buy together, right? Both income here. Right? I'm going to use something example. Your spouse getting 30,000, you're getting 5,000. Right? You're buying a million rent property. Your spouse is getting 30,000 falls in, you only have 5,000. Would you want to proceed with it? You can't proceed. It all depends on how far it is. Let's say it is registered already, it's on your name. Then you never see this problem. Then you have to go to the bank, get a written down, cancel the bond, sell the bond. Because it's on your name, it's registered. Anything before registration can be cancelled, depending on the service. In their cases, the clients that go to the hospital, to the operator, they stop it. Pay fees, instead of paying the deposit, they pay the operation. The spouses have died, they happened now this December, where one party died, and the body was dead. That was only the kids are there, the body was dead. There are cases where also December, the guy told me, I told him, you can't take years of finance. I'm going to 100% now. Try for 150%. The bank said, you don't buy. He told me, he said, I want to buy a car. I told him, no, don't buy that car. I want to stop buying it. The bank gave it afterwards, the bank is giving out 90%. Because remember, when you take debt afterwards, it takes us back to the bank. So your bond is approved, but the third is, you take a new loan. The bank finds out because you're not credit bureau. The deal goes back to the bank. We don't know, but the bank already knows. We get an approval, 90%. What they pay? We phone the bank, the wife was the deal. That is unfortunately. So, depending on the situation, depending on the client situation, you can adjust it. Like for example, remember at the end of the day you signed a legal contract. You can't just jump off. There must be grounds for you to jump off. Like you said, one person was insured, one person passed away. Makes sense. You can't just say, oh no, I don't want to buy this property. Especially, with the engine, you've done a lot of work. Now, that's why, and this is the importance of using a bond to push the deal. So as soon as possible to the attorneys, because the client can jump off anytime. But once it's there, it's signed, you can't just jump off anytime. Because you work, and then you're done, then you can take him up your provision. So it all depends on the situation, is that justified to jump off.
So about the same question, I want to know that the client got 100% took up the car.
Yeah.
And the one was in the process.
Yeah.
Then the bank said now you have 90%.
Yeah.
100%.
Yeah.
Then the 99% is dictated by the affordability of the score.
By the scoring of the client. Credit bureau.
But the score did not change.
It did change, you took a loan.
Or you take a loan, it changes.
Yeah, changes. Yeah, your score point went up. See, anything you do afterwards will affect you until the house is on the thing. That's why we tell the client, do not take any debts Those are options.
And in that regard, if it was the other way around, if the wife had paid off the car, would it have made it, would it make the risk less?
It can make the risk less, it's possible, but it won't affect the risk immediately. When I say the credit bill is some behavior, remember this is a debt, so it's immediate. Taking it down, the system already determines it. So over a long period of time, after 3 months, you find your points will increase, which will get the client. But it won't negatively.
The situation for they are trying their job the same way when they sign over to purchase. But now, in the process of registering the property, they got married. And it has to affect the property. How
So you were buying together,
they
right?
were buying together and they were both singles.
Now they got married.
Got married.
You know, I would say let a home register and then inform the bank. Because what happens now is, remember, nothing has changed. Two people, same income, everything, they just change the marital status. Right? Now, if you inform the attorneys to the bank, they will have to take the deal back to the bank and they will have to amend it in the state. But now the problem is, anything going to change in between that the bank didn't pick up. Let's say you're approving, but the client had a raise we didn't know. And slowly increase, and the bank still didn't know. Now it goes back to the bank. Are we going to say, well, we're going to pick up this? You understand what I'm saying? Rather for that, once a phone is registered, everything is done, then you go to the bank.
That's what I mean in 113.
Certain things you don't inform the bank. Because
It's not necessary. Now they want to go for lodgement, they went for the money, and then they have to start from the bond. If everything out of the bank again,
yes, they listen to the guys will go back into the phone.
if I name application, everything, you know.
You know, in December time, there's a lot of deals get approved very fast. Because, let's say, just before Christmas, a lot of guys go on leave, right? So the deal sometimes slips through. The credit guys are pushing. You know?
It's just,
You understand what I'm saying? They're pushing. Now we do the payment in January. You understand what happened? Now we have to go through every doc and there's but we didn't pick up this. It's a risk when it goes back to them. Because they work with everything. It's not just a matter of changing. Scoring the system. It runs through the system. The system might pick up something new. For example, when you apply, let's say we applied in December. In December, you fell in arrears, so the system didn't pick it up. But now it's a month later. So now you fix it. You understand? So, rather than do the payment, get it registered.
What's the minimum insurance amount you need to pay on the basis? Does
It's like it's difficult. Like life insurance, for example. Life insurance policy for myself and yourself will be different. Because it's a paying amount of insurance. Are you a smoker? Are you a drinker? Are you married? Are you single? Patient, you go out a lot.
the work you do sometimes.
The work, yeah, it's important, the work. So again, it's about the person. Look at all of the sectors. I mean, a life insurance, depending on the loan amount, you can get a life cover from 100. For certain clients, the policy can be up to 3. All depends. I can't tell you this. On average, you're looking about 2 to 500. It's about the rest of the time. Easy type back to say against them. All of those things.
Did you request health certificate before you cancel the request for health certificate?
Yes, you are. Yeah. But remember, it's not compulsory. But if it does, it's normally for your first and home buyers. Remember, those guys that want cost an extra amount of money. That's when I'll ask for insurance purposes. But your normal plans are not compulsory. It's very seldom you see the bank ask for that. Unless the client is very old, age of 60, 65, and he wants to buy that age. Remember, you are paying the credit. So that's when they'll ask for that. But normally, okay, next question is, what is the process for valuating the property and who pays for the valuation? So payment, remember I said, with invested, the client pays. Normal payments, the client don't pay. SL loans, they don't know. So once SL loans, they give us the, remember there's 2 approvals. On the first approval, this is SL loan. They do not do valuations until the client has signed and accepted. So that's why sometimes we get SL loans and we wait for other days first. Because once the client says I accept, then they will do the valuation and they will instruct it. Because they get the cost. So when it comes to valuation, the normal banks with SL loans, the bank cover the cost for valuation. Right? The banks don't always go out to evaluate the properties, especially when it comes to flats. Like Standard Bank, they will have the insurance and stuff like that. So sometimes they don't even do valuation, right? The contact person, I'll always put up you guys self as the contact person. It depends who gives me the deal, I'll put that person up. I will never put up the seller, I can never put up the tenant. Then later they go out, they will contact you, the agent, to make it. Remember, valuation is not property inspection. Valuation is to find value for a property. And not going to come and look at a small home and stuff like that. It's an inspector. Inspector jumps into the room and find the cracks and stuff. The valuator is there to find value. They're not inspectors. Here's the point.
When does the inspectors come out?
Inspectors are normally private. Like myself, let's say I want to buy it. And say, okay, let me get the inspector. Make sure it's my own cost, it's my own fees. So there's no inspector. Unless all the bank clients and says, it's a crack in your what you call the foundation or the roof or stuff, now you need to fix it. The banks will say, okay, give us engineer certificates and stuff like that. Because the property is getting it's one of those guys. But the normal circumstances, can you provide an example of a successful bond application you have facilitated in the past? Also, question, question. You mean that kind of supply or?
So when you're doing a successful bond, what is the perfect candidate that you would like to get? Well, in terms, yes.
Yeah,
So that's like the ideal candidate, that we can follow.
Hold on, So of course we have good. So the premium problem will get a story. So the rating must be a low-risk client, must be open. It's a good client, over 800. Once you see that point where you're over 800, the client doesn't have personal loans and you start spending. Because of debts, because the points is good, the behavior is good. And also the client's debts income ratios. Then it's good. So it's good to debt to income ratio is what? Not having personal loans, then the client can never deposit. Not big deposit, like 10 to 20%, it doesn't give 50%. Remember the bank wants to make money. So another 10 to 20% deposit, low risk client, low debts. Starts money.
And the question was actually what kind of debts does this person have? Because there's good debts and there's bad debts. So what kind of debt does
Good debts is vehicle finance, credit card, initial good debts. Right? Especially credit card. So the client asks you what type of debts should I get? Credit card. Credit card also score. It's a good account. And the client must try to keep it below 70% of the limit. So you understand credit cards, the limit, for example, 10,000, you try to keep it at 7,000 less. Remember, the lesser your balance, again, you're showing the bank, I can do it. You don't want to max out your credit card. Then you're telling the bank, I don't know. My wife is a credit card. So vehicle finance, home loans, credit card. Sometimes you find a client is nothing, then you might have to start with a clothing account and then do a credit card. But your credit card is one of the base accounts there. Personal loan, short-term loan is the worst stuff there. They just take personal.
And your things such as phone financing, desktop financing.
No, it is okay, but it doesn't pay too much. But your personal loan, short-term loans is very expensive. I also tell the clients, don't have too many people. Why don't you get a credit card if you buy actual people? You understand what I'm saying? Rather use your credit card, you use your Woolworths and Acres and stuff. Like you say, maybe you want to buy a piece, rather do it on your credit card. The interest is much less than your other financing, and it comes in your favor. And of course, you can focus on paying one day instead of having a desktop cell phone that you buy. Woolworths, you know, understand what I'm saying? Rather, one credit card with a higher limit, you can manage it.
And when it comes to insurance, what is a red flag? Having too many or too little?
Remember, insurance, and this is especially your government plans. They'll have sensitive gross, and this is what Asians don't understand. Gross of 35,000, the net will be 10,000. Why? Because you got a whole lot of insurance policies. A whole lot. So of course that affects your affordability. So if a client has too many policies, and that's why sometimes a deal gets declined, the advisor, like you see an advisor or broker, let them help you you work in maybe merge it and get less because, yeah, especially the black guys, there are a lot of people who comes life covers. You see, unfortunately, 30% from the gross salary is due to the policies. So, yeah, it does make an effect. It really does.
Government staff, right? Many government staffs.
Yeah, common stuff. You see them. That's why I always tell a person it's difficult when you say, Mark, the client is saying 30,000, how much is the client qualified? I can't work on it. Because if you give me the ITC form, out of pay stuff, right? I can work on it. But I'm not responsible for the figures I give. Because I didn't see the pay stuff. Certain clients can write 30,000, they don't write the proper figures. And then you come back to me and it happens many times. Even I'm telling you, it happens many times. The person will say, but Mark, you qualify the person for so much. I'll say, but you didn't give me a pay stub. I'll work on what you need. The pay stub is important because you see gross, and you see net, and like you go. That's what makes sense. And of course, it's like the line. Especially is communication. How do you communicate with a real estate agent, clients, to all the application? So let me first start with this. Pre-approval. So first, guys, I will not bite their hand and eat. So Michael is the principal. He introduced me to you guys. So he gave me the business. When it comes to a pre-approval, you will find Chantel will ever send it in pre-approval. I will send it to the office. I'll send it to you. If someone, anyone in this office, send me a pre-approval, I will give you feedback and I will give the office feedback. Because I want to make sure that Michael knows about it. I've had cases, I'm not saying it happened in this office. I've seen agencies close down where agents misuse the principal and misuse the office space. You understand? So, if you give me a pre-approval, no, I'm going to give the feedback to my person. So, when I do a deal as well, whoever gives me the deal, I normally will give an agent or office feedback and my feedback. But remember, as I give you feedback, I give that client. Only time when I give you feedback first, if there's something that we need to fix up before I tell the client. Like, for example, the bank has a problem with financials. But nothing to do with that. I do not tell the clients something about financials. Because it can disrupt the lines. I will just tell him, send a bank to do a property. But when I go to Michael and Michael, I need a complex financials. Why do I do this? You can find the complex financial, there's nothing wrong with complex, but it's in a bad state. Right? Now I tell the client I'm waiting for complex financial from me. Now it's going to ask me, what is complex financial? You understand? Now you're going to say, give me the complex financial. Now he's going to go to his uncle, he doesn't know nothing about loans. You're going to say, but it's got this pay. He's going to say, but I don't want this house. Just to find out they need some maintenance. That's what it says. So that's why sometimes I will help information. I will tell Michael the interest rate is prime plus 4%. I do not tell the client. I will just tell the client that it's approved. Why don't you even mention it to the client? Because I know if I tell the client that it's approved, prime plus 4, I'm disapproved. I can afford this. But it's netting will come in for prime minus. You understand? So that's the information I will help. So I'm misleading the client or I lose the deal or how can I say I'm false. Just I know if you give the wrong information at the wrong time, you can because rather than more approval to show the client what a better rate. Then you say here's the right rate, but here's the side. So on communication normally WhatsApp, that's why I see more and more people are communicating on WhatsApp. Normal phone calls, very seldom you get all of clients on which is like normal phone calls. Emails are also sent, but most of the communication comes from WhatsApp. Our WhatsApp your agent and our WhatsApp the client will communicate as well. Are you guys happy with the communication going?
Yes, sir.
Are you happy? Do you need to changes? Any issues? Please stop. Right up. Okay. Are you happy? Any problems? Any customer? Yeah. Yeah. You sure? I'm very deep talk. Happy with my feedback? Michael? I say to my feedback.
See my hands up.
If there's issues, guys, you know, they put something down. So send me a message. You know, you agent, you can always call. Anytime you email for what my number. Because you need advice, please call. After I'm not going to answer you. Oh yeah, that's the other thing, guys. If you get a message quite late, like 6 o'clock on WhatsApp, don't think I'm rude, not very slow. My problem is, if I open a message to them, Right? Tomorrow I might not remember to respond to you. And in the morning, you will not believe it, my WhatsApp is more busy than email. It sometimes takes me like a half an hour to work through my WhatsApps compared to my emails. So if I open anything up yesterday, and it's very busy, very focused, there's a high possibility. So if I do not open it, please don't think I'm rude. It's just, I rather open it tomorrow when I'm sitting in front of my PC and I know what to work. Even on a weekend, because I don't open this. Because I know, imagine you're sending me something on Friday night. How am I going to remember it Monday morning? That's why I don't think I'm rude. That's all. And Michael knows. You'll see me in the politics or something. Joint application, what is the policy on that? Remember, joint application, this is meaning it's more than one buyer, so it's 2, 3, up to FMB can apply up to 12 people. Can apply up to 12. Yeah, 12 people can buy a property. So when it comes to joint ones, it's 2 or more people. They do not have to be married. They can be friends, but anything can buy properties together. But remember this, guys. Every client's credit bureau gets checked. Okay, 12 guys, 12 credit bureaus get checked. If you have a client is blacklisted, they the whole bureau. So one or more people they don't have to be there, can buy their deals together. It's always, of course, better to buy in a company name. More than 2 to 3 people going upwards makes the deal easier. Question?
Yes, in the 12 people, if one of them has a criminal record change.
Criminal record. Look, I don't know. Criminal record depends what is it financial crime? So because I know that if it's financial crime, right, you get blacklisted. It's a problem. Like for example, fraud or profile building. Let's say that you know what's profile building. Profile building is like, for example, I take money from my credit card, put it in my check account. From my check account, my savings account. From my savings account, back to my credit account. What am I doing? Pushing my credit balance of my check account now. So I'm getting more money. Right? I'm manipulating the system. I'm putting money into my savings account. It's telling the savings account I'm saving that. I'm not actually. I'm putting the money in. Right? You can do it. I can. You can take money from your credit account, you can put it in your check account. It's increasing internally in the bank system. Right? It's increasing your credit. If you look at your bank account, it will tell you credits and debits. If you look at your statement, you have credits and debits. Right? So you can take 5,000, you put it from your credit card in your check account. Tomorrow, savings account, credit account. So now your credit in my check account is 5,000. My saving account, 5,000. I put in my debit to my credit account. I do it again the following day. 5,000, 5,000. What am I doing? I'm increasing the income of my I'm profile. Percentage profile. If the bank catches you, they blacklist you.
You can do it.
I can. You can do what I can. Because I'm in a financial, I'm doing financial advice.
You also understand everything.
Exactly. Person in a bank is working for the bank. Person is working and is a broker, for example. Because to giving financial advice. So those type of clients, the bank blacklists you. It means every financial institute has blacklisted you. When it comes to
Is it whereby you want to build your credit score and you don't want to take any credit, but you need to, so that you can maybe...
we have to work. So remember, we have to make money, to make this, you have to make money, you must have. So you must have a account. So if you have nothing, the bank can't determine. So you need to have something. That's why getting a credit card is vital. It's crucial. I find that sometimes you can buy us in the same many years back, maybe 15 years back. Me and my friend walked into the border. We bought a same program. He didn't have a credit card, I had a credit card. I walked out immediately with a phone. He had to wait a week for it. Because his application didn't be approved. Mine was approved because of the credit card. So credit card does help. Well, like you said, a perfect score. The only way to get your perfect score is getting a credit card. You cannot get a good score with no accounts. Because Again, you can't determine if you're good or bad. Not many debts, but some debts.
So how best do you now use the credit card to your own advantage?
Well, managing your accounts, paying off faster. If you buy your groceries, for example, I buy my groceries with my credit card. Once I get home, I transfer. Yeah, because remember, the credit card is 55 days interest. So for 30 days, only use the credit card to pay that. I buy it with my credit card, I get home, I transfer the money back into my credit card. There's no fees. So what you do, managing your debt, keeping it under the 70% market as well. Your card, using it to pay.
When you take out the credit card, how does it, in terms of each step, just to use something?
Yeah. 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 Yes.
Your credit card causes your score to go up.
Yes.
When you take it.
Look, it's a behavior monitoring system.
Okay.
Everything's about behavior. You determine your behavior. You can't do it overnight. It takes time. Like Michael will determine user agent behavior over some time. You can't say take up the money and fire it. It takes time. Same thing with credit. So once you take a credit card, it's a new thing. Automatically, the first thing is what is it? But now, how you managing your credit card pushes, it increases the point the fastest out of everything else.
So before 55 days, if you took consider for 3,000, you get any interest, you just pay.
Yeah, you use it, you just pay. Remember, do not withdraw money from the credit card. Right? Do not go to the ATM and withdraw money. From the credit card is not used to withdraw money. Please. So remember when you're using it, you put in back. Again, you're beating the system. The system can see you handling debts. You mustn't max out your credit card. Keep it low. It tells the system again, you know how to handle it. End of the month comes, let's say your limit is 15,000 on your credit card. But you constantly keep it under 5,000. You're telling the system, I know how to handle my debts. Once you hit limit, they call it being delinquent, meaning you're going over your limit. Now you're a bad payer because you can't control your finances. That's why I pay back, because now I want to keep it below that much. So the system can know, listen, this guy can pay his debts. That's what it's about. It's about proving to the system, I know how to pay debts. Because a credit card is a lot. Only credit card also is a lot, but you can't do anything with what you get. And other advantages like your reward system of things. Your rewards are high on credit card. So you fuel and stuff, you get more points back on the credit card than what you would get on the check.
And what does the bank benefit if you're paying the interest?
So they don't pay upfront. They don't pay upfront, but they know us. They know us.
In a good time, better put that in.
Yeah, they know us. 90% of clients credit cards is. They know us. They know us.
Do you know the duration for the interest-free period?
It's normally 55 days. Some is 55, some is 57. Interesting. But remember, don't withdraw. Swiping and buying.
So apart from buying the groceries or putting it on the bike, what other ways have you helped to build your credit score?
That's all, and just keeping it under 70. That's why if it won't happen immediately, it will take about 3 months time. That's all. But use it. Don't let it just lay there. Use it. But keep it under your 70. I use it for groceries and I pay back because I get the rewards back on my side. They help me with that, and I pay off faster. It's the simple. It's a habit now. Go to background, come home, grazie. Why now? Don't travel me for 10 minutes. It's a habit. Otherwise, you leave it. You won't mind. Go. You know it. You know it.
So, my question.
Yeah.
Okay. Meaning, this clothing, like your video credit profile with a bank because of you are able to get something higher future. So all this clothing, reward and phone,
They don't count.
they don't
It's
count
too much.
They don't count.
It builds your scoring very, very slow. Right? Look, if you take a clothing account and a cell phone account, cell phone account is not actually a hit. Like the rewards and stuff, it builds up very slow.
Oh,
Sometimes a person will go immediately for a credit card, it might decline you because you knew. Then you might have to get a clothing account and then you go for a credit card. Your clothing account's credit score takes very long to go. Right? And then remember with the clothing account is if you don't have a debit order, you pay late, you go in a race, right? You don't understand it, right? Your installment is due today, you pay tomorrow because you're comfortable, you relax, you want to pay, you need a raise, you need a minus, complication. Your credit card, you debit card money, you're okay. You just put in extra money. So mentally, it's much easier than having to manage your account. Much easier.
So when somebody wants to get to cleaning up proper with the bank,
Yeah.
the best advice is to pay for credit card.
Credit card, stay alone from the personal loan, and stay alone from short.
Credit card
Is the best. And try to go to the form actually. Capitec, not go for Capitec's bonds with that Excel. Capitec don't do bonds. So rather go the profile of the bank it does it. So it might be more expensive, but long term on a buy property, remember the better your profile with the bank, the better your interest rate. That's crucial. Any more questions on credit cards?
How long will you get the credit card? Is it for life or for
Ja, credit card transfer line. Transfer line. They will probably nominate off your limits, decrease your limit, yeah, credit cards. The longer you have it and the better you use it, the better your rating with the bank. So the bank has internal ratings. Besides now, your credit bureau, you get internal rating. That's why you find sometimes when you do deals, and the client has no idea, says it's very good. And I will tell you, it's a possibility that the client might pay for it, or the interest rate might be high. So now I'm inside that. I have nothing else or other things. I have no accounts. But on my EPSA profile, EPSA knows that I have a savings account. I'm a good client at EPSA. The other banks don't know nothing at all. I don't have any account. And now I submit to the banks. So the chance of EPSA flowing with a better deal is how much higher than the other things because I got a profile. But now you've got a profile with Capital. No, the banks know you. And that's not happening on a regular basis. And then go for a home finance, then the client gets upset because the interest rate is quite high. And I will mention it to you. Credit score client has low accounts, either 10% or we get 100%, you find interest rate being high.
like the last deal we did
Yeah.
for Wonder Park Estate, 801,
Yeah.
like that guy, the last
Yes,
one.
the last one. Remember FNB did 5 plus 4, 5%. Yeah, because not having account is a risk line. But I think Netbank gave us a better rate. Netbank's rates are quite good. So Netbank is standard rates. Those two rates, guys. Current is quite good. End of March, end of the financial year. No, actually end of February is end of financial year. End of this year. By 1st of April, the bank systems will change. That's when we will see again who gives better rates, who has approval, who doesn't. Every April, you will pick up the trend. You will see from your side as well which bank is more than us. Like now you will pick up the net bank is giving you, you will suddenly see standard bank is giving you. Because the bank system gets adjusted. Government stuff, can you build a joint, you'll understand joint is something to our people. But I wanted to say, when it's so many people, I don't do it in the companies. 3, 4 people. Better to do it in the companies, especially if they're late. We don't use a spouse. You understand? Let's say you 3 buyers want to buy a we call it POP programs. You can put them in COP, for example, but you don't want to use the wives. You put it under the companies. Your wives are not because 3 of you are directors. It's a group of our family. The group of our family companies, you don't need those spouses. But if you buy with the individual names, not another company's name, but now you married, you will need your spouse's details. So you more part certificates,
Company, we had more.
don't go plus. Plus is any government stuff, yeah. Only thing we have from the government is plus. You guys are all plus what? Maximum income of 22. More than that, you do not qualify for this. Nice note. Michael, you guys look like useless?
Too much.
What is the English turnaround time on plus? What's the quickest?
Because we have another lady who are doing because of your work, I know about this.
Yeah.
We have another lady who are doing flips for us.
Yeah.
When they come to flips, okay, the lady from Better Body who handle that.
Yeah.
And they are still turnaround time. Sometimes it takes time,
Yeah.
sometimes it takes 1 month. So, but the advantage to those kind of clients,
Yeah.
we had it to work on.
Yeah. So it takes some time.
It takes some time.
sometimes even they don't even pay on time when the property register.
Yeah.
They have to even drop from the deed office
Yeah.
and wait for the money to be paid to the account before they bring back to the board. So it's just what it is, but we can't do our control back.
Yeah, there's a problem. We are looking into doing it as well. It's just that, like you said, the turnaround time is a full system.
If you don't have somebody, see, they have you don't have somebody inside
It's
to
a
be
problem.
helping you.
It's a
So
problem.
they have people inside because when it's a big company,
Yeah.
people inside.
Yeah, we also
have them maybe looking to that.
Yeah, we are looking into it, so we are meeting with him, so to see that.
If you can
Because I don't want
see-
to do deals and I unfortunately don't control. If you're going to get upset with me, 6 months later there's no plus.
Yeah, I did one. The first speech I did was in 2021. It took 1 year. That guy got 185,000. The property in Nigeria, 185,000. Well, even the one I introduced to me.
Yeah.
Then I got to know it. 185,000.
Yeah.
But it took 1 year because he went directly by himself, he did everything by himself. Do everything by yourself. Nobody to contact, no way, and then.
Yeah. Okay, next question is how do you handle applicants that decline or put on hold? So it all depends on the type of decline that you have. If it's a decline on affordability and the client can settle the accounts, we speak to the client and find out if the client can settle the accounts. Here's the raise to settle, here's the accounts, can the client make claim to settle the accounts? If the client is extremely bad, unfortunately there's nothing we can do. We can advise the client what to do and of course the time frame. Again, like you said, put it on hold, put it on, we advise the client what to do. When it comes to your Chinese clients, they are extremely good Chinese.
Chinese?
Yeah, they are disciplined. If you challenge the Chinese client, do this for only 6 months. My man, 6 months.
What?
Chinese, they're so disciplined. You tell them to do something for 6 months. 6 months, they're going to come back to you. They will do what you said. After 6 months, they're going to come. So the company will say, I did what you said, yes, my God.
So with AFSA, Chinese people can be fine, right?
Yeah, okay, fine. Look, the other
Because
guys.
a lot of them as friends.
Yeah.
Long time I have them as friends.
Yeah.
Long time.
Yeah, that's
I'm gonna bring them on WhatsApp.
Like I said, it does. Now, we can advise the client to do something. You can find the client on demand. A month later, the client is even going to bust into it. Those type of clients is nothing you can do. Sometimes you just have to get it. You're not the cherry case. You can't just pull up. You have to keep it up. What's the minimum income level to qualify? So remember the minimum bond is 100,000. So minimum income you can't qualify. It's a 100,000. Possible for transition to carry without valuation. Okay, so the property transaction, right? Is it possible for a transaction to be carried out without property valuation? When this question, yourself again?
No, that was clear.
Are you asking is the valuator going out or for a bank to bypass valuation completely?
Yeah, that's
No, they can't bypass it. You can't approve and then get done. Look, sometimes valuation was done and you find that it is approved today, within a few hours it's final approval, second approval. It means valuation was done. But the deal needs to go into the valuation stage. You can't bypass the valuation stage. But you can go fast in the valuation stage. Like I said, sometimes valuation was done, things are well. They have aerial photographs, and it's becoming more and more. The bank actually takes aerial photographs. They take a lot of photographs. You find everything going on to the property. Because remember, the bank pays for the valuations. So they look at those pictures sometimes, and they can bypass it. Going out physically. But you can't say you're not doing valuation. You can't. Because the valuation, in the valuation team, it's not in the bank, it's outside. So the bank is approved credit. From credit, it goes to the valuating team in the bank. The bank guys refer it outside. Called the DVP valuers. They do the valuation. So they take the risk. Whether pictures, whether valuation done already, and they know it. That's why when the DVs comes to, you'll see sometimes I'll say, I can motivate it after valuation. Because once it's in the valuation space, I can't move it to credit. I can't motivate it. I can't do nothing with it. until it's back from the delinquents. Once it's back to credit, then I can motivate you. But you can't bypass it. So if the valuators say they're not financing, not rather financing, they say they decline the property, the bank declines. They say all good, it's all good. They have problems, the bank says. So the bank don't go physically. Remember, the guy that goes out is independent guys, it's not the bank. And then we don't have contact with your valuators. They don't communicate with us. When it comes to the valuation box, it's all emails. That's why if we follow up with the bank, I'll ask you, is a bank valuator? You say no. I follow up with the bank, here's the guy. The bank will follow up with the valuators, and it will come back like that. There's no direct channel. Only direct channel is you guys with the valuators. We don't have that. We have the bank and the valuators is like that. Even the bank themselves do not know the valuators because they send it to the valuation hub. And they make and the valuation hub make what they do.
What kind of motivations that?
Motivation are good for valuation.
No. That's
That's why it's crucial to do a pre-approval. Pre-approval tells us a lot about the so yet sometimes you motivate your personal motivation is the type of income is the same. How you structure the deal. I did a deal now recently. You know, you motivate a deal on the bank's credit policy. What I mean, I did now also, client is salary self-employed. Right? Client doesn't have financials. Right? To understand that product, you would know EFSA and FME as a product, salary self-employed. The deal was declined because the client doesn't have financials. But now I motivated it on the bank's lending criteria policy. Meaning your policy states and do not have their financial statement. If the client is full-time, and they say getting a salary, and is being reflected on the bank statements. And I have to approve. The bank overrode the decline in the approved my deal. Because you fought it on their policies. Because remember, you're sitting with the human on the other side. Sometimes the credit manager has his reasons of names and stuff, and he just declines stuff. And he goes to another creditor, because remember you motivated it. And then I will say, okay, but this guy can take the mistake. Or they will ask for deposit. Now I will ask you, is the client ever deposit? And you can motivate him again. Sometimes the client's business. Sometimes the client has settled some debts and we ask for those debts. Sometimes the client wasn't in arrears for certain reason. We'll ask the client to do a motivation. For example, it's our common one, there was a payment in there, and the client had to go through some financial difficulty, but the client has settled the account and things going on. It's one of our motivations. So it all depends on the type of client that you're working. So Michael?
Yes, there's something to explain for that today in terms of if bank goes out to what to tell the person to the course for evaluation or not.
Yeah.
In terms of sometimes the next call.
Yeah. So again, you come into the valuation space. The bank is something called desktop valuation. It's not very head of the process. In especially with Standard Bank, the financial standing of the properties. Remember, not only you sell in certain areas, there's other agents as well. So sometimes, month or so back, same block that you are doing, the agent provided financial statements for that block, right? So now you're doing the same block. So they already did it, and you find it easily. It's going to be like test of you don't have anything to do. That's why normally we do something. You get an approval today, it's AIP, but tomorrow we go on with the day. It's not the same thing. Tomorrow you find out what's the appointment date. Can we do this? We always ask for this. Say, Mark, yes, we can do it this. Say, no, Mark, listen. Guys, but it's very beautiful. Either benefit that I've told you to go give it. Please do not give the tenants. Do not give the tenants.
The tenant of
The tenants. Do not get a benefit to the
please,
guys.
we have a case in the commercial. I don't really the deal. As the commercial, please, immediately the guy went there. That day, it's not about that. This guy, we just open up a kind of walls.
Yes.
That's like, I have to go there for the second evaluators before we go like,
Yes.
Well, tenants are crazy.
They are crazy.
Tell you.
Guys, please do not give the tenants. They will never be available. They will show the latest thing they didn't need to see.
I'm telling you.
I've seen the tenant take the ventilator into the roof. They show them buckets.
Just imagine.
They show them buckets. And also, what people don't understand is the ventilator will only call time called twice. After that, they rejected the evaluation. And then until have to be reinstated again. And it takes from me another 2 to 3 working days to reinstate the evaluation. So there's again a time delay. And if from the bank side, let's say I send it to the evaluation, it gets rejected. Right? They will pay an answer. We do it again. The second time, it gets rejected, they withdraw the money. They will say, get proper arrangements done first. Again, now delaying a deal 2 to 3 weeks later.
Clients get tired.
Client gets tired, the seller gets frustrated. That client was fine with your house, nothing wrong. You know clients, they still look around. Buyers remorse, I find a better place, 20,000 and cheaper.
And they walk away.
Now we're taking 3 weeks for this deal. Keep walking to take that deal. You understand? Try and stay in control. That's why I'm saying, me as a volume originator, it's letting you to stay in control. That's why giving your the greatest details to the tenant, we're not staying in control of it. Doesn't help. And guys, when it comes to pre-approvals, you just need to advise me if you still want to do it this way. Myself, when I do a pre-approval, I give the feedback to you as an agent or to office. I tend not to give it to the client. But if you tell me to give it to the client, you communicate to the client. Remember, it's not your client, it becomes my client. So what happens, I must say I'm stealing your client. What happens is 50% of those clients do not go through the agent. They go through a different agent. And then I find this agent has already come to me and said, Mark, but I gave you a pre-approval, I should deserve the commission. But the agent didn't sell it to someone else. So I prefer to give it to you as an agent. I think it's better to control it with the agent. Because then the client doesn't know me, knows you. You think you have done a pre-approval, he trusts you more. But once I step in, then it's 50-50. I will never take a client from your office and give it to another agency. I will never take another agency. Even if it's a property decline, whatever it is, it's not my business. That agency, but I can never share with agency. Only if it's a private client, I can, but if it's an agency's deal, I can never. So that's why I only work with clear. So you can advise, I should speak directly to the client, give the client feedback, work with the client, it's up to you guys. You can just let it go. But guys, just be aware of the rental income, because most of your clients are investors. Just be aware of the rental income. That's good. And I think that is it, guys. It's a lot of information, a lot of questions. I don't know if you guys got more questions for me. I don't know. Next time.
That time when you said to find the income, you should divide the selling price with 28.
Yes. Yes.
I didn't understand why it's specifically 28.
Okay, so the bank had something called, so a few years ago, the bank brought in something called the National Credit Act. On the National Credit Act, the banks were limited to 30% of the seller. You can't take more than 30% of the seller as a foreign store. So previously, they could take up to 50%. So meaning, if you used to earn 10,000, you could take 50% of your salary, which is 5,000, and pay it towards your home. Right? National Credit Act, and you can't do it that way. Maximum you can take is 30% of the salary. That's where it is. So let's say, for example, you're earning an income of 30,000. You use 2 plans. Let's say that this one is only 30,000. This one is also, let's say, one is earning 30,000, one is no debts, nothing. I have some debts, right? But we find that we can qualify for the same amount of loan. Income is the same. I have debts, you have no debts. You can't go say, because I have no debts, how can I have expenses? You are still stuck with 30% of the salary. You can't take more than 30,000. You can't take more than 10,000. Even if because you have no debts, you are still stuck with 30%. So if I have debts, I qualify the same because my debts is low, and I can pay up to 10,000. Remember, you are linked, so you'll find it sometimes the client will say, but I'm earning 10,000, but I'm paying 6,000 rent. I can afford this house. Rent, one is to go. There's nothing that regulates the rental that you pay. It's agreement between the agency and the sellers. You can pay up to 80% of your salary for rent. But when it comes to the home loan space, maximum is 20%. Yes, sir. There's the interest rate drop. It's a very safe margin. There was something I wanted to touch on. I'm not sure I'm going to reach you. It's also coming off the loan. People are buying a trading. You get something called a trading company. Trading company is when a company does business, making money, getting rental. I would say no rental, so it's not confusion. So it's making generating money. When you exit business under your company, making money. It's a trading company. Then you get something called a non-trading. Non-trading company can be of directors. But the directors themselves is only the income. Getting a pension, getting a honorary getting a salary per person, but the company itself is not generating income. That is not trading. Right? That's not, because it's not generating income. So when a bank will use the director's income to qualify for the not the trading, so meaning the directors, the surety for a company that's not trading. When it comes to the trading business, it's becoming more important. Banks don't actually want to do trading. FNB, they don't do trading businesses. SA Home Loans don't do trading business. Instead of actually saying this, even if the business is trading, the director must qualify for it. So meaning, what's happening is, let's say I have a business, let's say vehicle, I sell cars. Car business is doing very well. I'm doing everything to the car business. Like myself, I'm telling myself, I don't want mechanical in my head. I want everything to do business. So I'm protecting myself. Right? The day I am finance under a business name, Standard Bank, FNB, they're not going to approve. They say because you, Mark, is a director, I'm not making money. I'm not going to say that. So they can't finance me because they want me to be the person earning the money, not the business. Only EPSA and FNB will finance them because they only look at trading businesses. Again, there's a loophole around it.
So it's Capitec and another bank that does not go for trading, but it's Capitec and Capitec.
Okay, remember Capitec don't do
No.
complete. It is your FNB, Standard Bank, they don't have trading businesses. Only EPSA and FNB.
So between Nedbank and ABSA, after that, which one is very important? Who's working? Who's a contractor or second?
And does it have financials or not?
The more I'm saying is between ABSA, Nedbank, and Standard Bank.
Yeah.
Let's be fair, so which one do you advise for somebody who's working to be using, somebody who's self-employed to be using? Yeah, those two categories.
They say full-time employed are leans very strongly towards Nedbank and EPSA, especially the Nedbank, the full-time employed, that's something. The reason is they are easy to finance and they're much more flexible to finance. If it's a self-employed with financial statements, I would go to EPSA. EPSA, again, they're much more open-minded than the self-employed person and much more flexible when it comes to self. For example, my business is okay, it's not making that much money, but me owning properties worth 6 million or 8 million. EPSA will consider it because it's about the risk of it. So I'm buying a house for $1 million under my business. The business is not to make too much money, but I am strong assets. They say, okay, but if something happens to the business, I got this man got assets, so I can take it. But I say they're flexible in it. It comes to EPSA, when it comes to self-employed. But self-employed with financial statements, they're much more open to The Nedbank salary guys, they are quite good. Salary guys, the accounts are quite good and they're quite fast interest rates. Standard Bank is full of nonsense. They can be difficult, extremely difficult. They do not bypass, remember I said 28% and 30% RPI. Standard Bank is simply 7%. They can be very strict. Look, maybe sometimes look at they do the other banks, but 80% of the time they are very, very strict. You'll find that Standard Bank will decline and other banks will find it alone. So, Nedbank and EPSA, self-employed, it brings in a lot of complications, EPSA. Just people that you can know. Foreigners, Temres, EPSA. Yeah, another cheapest bank. FNB. FNB. Yeah, EPSA is not the cheapest. Not the cheapest bank. But they sometimes want to grow. FNB works like this one, right? That's important. When FNB client, when we submit the initial interest rate, FNB client, the interest rate is the highest. They are the highest. When FNB client, out of all the banks, the FNB interest rate initially will be the highest. Yeah. FNB client, their rates are big. They can give you up to 13%. And what they say is, we will match the lowest rate. When FNB client, they give you the highest rate, and they say we will match the lowest rate. That's how they do this. They don't give you a basic answer. So if a client just goes to FNB without doing the other thing, he's going to get the highest rate. If you're only going to go to two banks, you're going to get the other banks is a bit less, they will match. But they themselves give the worst rate. So they say this is the market strategy. We give up high and we match the lowest. They will not beat it. They won't be better. They will match. That's it.
Thank you.
Guys, any more questions, guys? Don't pay for everything. Yeah, difficult. You guys fine? Very quiet on the side, sir. No question?
Seeing that it is a new small bank, what comments or strategies did you have for time bank?
Timing is normal. Is it now capital?
It is?
Capital, no. Timing is wrong. Like merge. Sorry? No, man, you merge on the capital. Like a business comes up. Timing. Really? Merge is now what capital. Yeah, so labels used to be for everything happens online.
Yes.
Yeah, they merge on the capital.
The investing part.
Time.
No time.
I'm asking, there's an investing. It's not that investing, but isn't it?
No. Timing. Yeah, you can say so. I think they don't have a physical place to go to. Because more than online stuff, more quite cheaper. The biggest problem with timing was for business clients. They couldn't hold the proper business connection. So they merged under the capital.
For the business profile.
Business profile. So they're going under their umbrella. So you're going under your capital. And with capital, it's only short-term finance. You have to, sorry, nothing on here, not personal loans, credit cards. Because they make more money. No home finance. So capital do not do. Just remember. It says capital, you look at it very closely, at the bottom it shows A7. Good?
A round of applause.
It's a bit sweet, but yeah.